So last class, which we were discussed about different types of human resource accounting. In that, we were completed a historical cost method, replacement methods. So now we are going to discuss about um, opportunity cost method. So how we are going for an opportunity cost method. So in an opportunity cost method, I hope you all are aware that is opportunity cost in the sense. Is I hope now my PPT is visible. So because of technical issue, I hope that is 5 to 6 seconds, so which you are not able to visit or see my right. So anyway, that is so last class which we have discussed about your historical cost method, how we can determine the value of an human resources. And next we started with replacement cost method, which we are discussed. Now the third one it is opportunity cost method. So this is the method which is introduced by the Ackman Jones uh, for determining the value of an human resources. And this one we call it as a market value method. That is, if you look at the first two method, that is, it is an historical cost method or replacement cost method. It is that is if an individual person if working in a single designations or if he is performing in only one department, I hope that we can easily determine the value of that person. That is, but you just think about that as the more it is like an if it is a CEO or if it is a manager in those kinds of employees. If we are not, they work in more than one opportunity. If they work in more than one uh, places, that is in that cases which we are not able to use those methods, that is for that reason which we have an opportunity cost method which we determine the value of an human resources based on the formula called what we sacrifice divided by what we get. So that is what the method which we use for determining the value of an human resource based on opportunity cost. The next method is standard cost method. Standard cost method, which is suggested by David Watson. So this is the method which we use in cost accounting to actually when we are determining the cost of a specific product. In the same way, it does, which we determine the human resources based on the standard cost. That is, take an example, that is in your company there is a different levels of employees which they are working for each designation. Let's take an example, that is if there's a particular person working as a foreman. Let's take an example, that is you are fixing the cost around 10,000 rupees. So next you are going for the if it is a superintendent, that is a supervisor. Let's take an example, that is you are fixing the price is 15,000. Then it is taking an example, managers, you are fixing the specific fixed cost for each category of employees who is working in your organizations, and based on that is which you are determining the value of any human resources. This is the method what we call it as a standard cost method. So these are the four different methods which we were used for determining the value of any human resources based on historical cost method. The next method which we are moving, that is, so that is monetary value based approaches. So monetary value based approach is that is, we all are aware that is human that is historical cost method which not fetch you in a the right value or reliable value of an human resources. For that reason which we are move on for monetary value based approaches. Is the monetary value approaches which determine what is the present value of an human resources which that the organizations bear in the entire workforce of an employee. Let's take an example, that is if the present employee joins in an organizations in the age of 25 or 30. So let's take an example 30. So that the person joins in the age of 30, that the retirement age is 60. Till that year, if that the particular person works in an organization, what kind of benefit that the organizations get, and that what would be the present value of that one. So in such cases, in such ideology which we determine the value of human resources, that kinds of method which we call it as a monetary value based approaches. And that is the very important method of what we are seeing in an monetary based method, that is the Live and Squats model. So we call it as a net benefit method also, that is. So in this method, that is, we will follow 5 steps model, that is. So what is the method which we are following, that is? So in that, that is, we are classifying your employee based on specific groups according to their age and skills. Let's take an example, that is, in your organization there is 4 different kinds of age groups of employees which they are working. Let's take an example, that is, you are dividing them as 25 to 35 one group, 35 to 45 is in a second group, and 45 to 55 is in a third group, and 55 to 65 is in a fourth group. Just assume that is your retirement age, your employees retirement age is 65. In such a way which we are dividing your employees, as well as that is, you are dividing employees based on their age along with the skill. That is, take an example, 20 to 35, how many of them are skilled, how many of them are unskilled, or how many of them semi skilled. In such a way which you are categorizing, and based on that which we are determining the value. Then the second step what we are doing here is, you are determining the annual earnings of each age group status. Take an example, the person who on a less experience, he gets a less salary in an organization, right? In such a way that is, in your example, that is 25 to 35, we are considering that as the annual earnings of an employee is around 1 lakh rupees. So next, go for a 25 to, sorry, 35 to 45, you are considering as a 2 lakh. 35 to 45, which we are considering 3 lakhs. In such a way that is, which we are determining the total value of an total earnings of each employee. That is what which we are record, which we are considering. Then the total earnings which each group will get up to retirement age are calculated. What we are doing, that is, take an example, the particular person which is joining in our organization in the year of 25. So 25 to 65, that is a 40 years. If he works till 40 years, what would be the amount which he earns in an organization? So that which we calculated. So that will be calculated, and that will be converted to the present value. So that is the method which that is the step which we follow in your third stage. The fourth one, it is, the total earnings calculated as above are discounted at the rate of cost of capital. So what are the costs which we are incurred on investing on their training or different kinds of cost? So on that cost, what are the return on investment, what the company is expecting? Based on that, which we determine the discounting factor. So by using the discounting factor, which we determine the total earnings of an employees present value of the organization, that will be determined. So in this way, in the Live and Squats model, which suggests that the company, how they have to determine the value of human resources. But in the case of Live and Squats model, the most of the companies like BEML, if you take an Infosys company, so that is you can go for an petrol companies, all those companies which they are using squats and Live and Squats model for determining their employees value in an organization. This is the formula. I hope that you can easily look at the formula. I hope that is you are familiar with this formula. With a little bit changes. I hope that is. I hope that is you in your previous classes which you have studied about financial management. There, I hope that is you are used the formula called present value, calculating present value, right? So that the present value formula which we use, that is cash flow divided by 1 plus r to the power of n. There's the same formula which they are used with a small changes. That is, the small changes is, that is, we are deducting retirement age with the present age. That is the things which is different. Other than that, is the methods are same. I'm not telling that is the formula is same, the method how you calculate is same. So when you're going for any calculation, so I hope that you may understand a better way. The next one, it is next method which we are looking, that is reward valuations method. So reward valuations method is also the method which is introduced by the flame oils. So according to this method, that is here which we are not determining the value of an whole group, that is, which we determine the individual value in an organization. That is, take an example, in earlier cases what we do, that is, we'll go for a 25 to 35 age group, and which we determine. So that is the group value which we are determining. But Framer's model suggests that is you have to determine the single person, the individual value in an organization. So that is the method, what we call it as an Errico Flammer's method. So this method which we call it as a reward valuation methods too. So the formula which we are using, that is E into RV, that is the person expected realizable value is equal to Ni equals 1. So M into I into Ri minus O into Ri divided by 1 plus R to the power of T. So this is the method which this is the formula which we use for determining the value under Pleymore's model. So while determining this model, so we will determine that as we will determine how many times, that is in an entire work time of an employee, how many time he would like to change his employee in an organization. So let's take an example, how many times he's changed his job. Let's take an example, any person that is he joins in a company and he'll retire, I will take he'll go for a resignations within 2 to 3 years and he'll change in a other company. In such cases, if you use then a stable model, that is you are not able to determine a right or the perfect value. So for that reason, what the framework is suggesting, that is how many times he is changing in an what is the probability of employee change his job. So that will be determined, and based on that, which we determine the value of an human resources. Along with that is there is a second point which they consider in an frameworks model, that is leaving the company for the reason other than retirement and death. So other than retirement death, how many times or what is the percentage, probable percentage, that the one employee which they leave the organization, that will be predicted, and based on that which we determine the value of any human resources based on frameworks model. The next one, let us the Morse model, that is we call it as a net benefit method. So this method which they are introduced in the year of 1973. So this value of human resources equal to the present value of net benefits derived by the organizations. So far in a live Scott's model, or if you go with a frameworks model, what they are suggesting, that is what is the earnings which is made by the employee from the organization. In that perspective, which we are determine the human resources value. But in the case of Morse model, what they are saying, that is, what is suggesting, that is, what is the net benefit that the particular or the company which they gain from a particular employees. That is the logics which that the Morse model which is used for determining the value of an human resources in an organization. So what are the steps which they are following? As like the Flames model, or sorry, that is Alive and Scott's model. The net benefit model also follows the 4 steps. What are the steps which we can see? That is the gross value of services to be rendered in a future by the employees in their individual as well as their collective capacity is determined. That is the same way, that is what we are doing. The particular persons, how many years he may works in an organization, that will be determined. Then the value of future payments to the employees is determined. What is the annual earnings till is retirement? So what is the benefit he is getting from the company? That will be decided. The third one, it is very important. That is the excess of the value of future human resources over the value of future payment is ascertained. Um, that is what are the future human resources which is required. Let's take an example. When you make more, or when you diversify your business, you require more kinds of employees, right? That also which we calculated in the third steps of net benefit method. The fourth one, it is the present value of the net benefit is determined by applying the predetermined discount rate. So predetermined discount rate, so what is the expected of an cost of capital? So based on that, which we determine the discounting factor. So by determine the present value, which we determine the net benefit of what the company received by each individuals, that will be decided. So in this way, the Morse model which suggests you to determine your human resources. This is what we call it as a monetary value based approach. So next one, it is non-monetary value based approaches. In a non-monetary value approaches, we have two methods. That is one, it is Pekin-Ogan model, that is introduced in the year of 1976. So if you look at in a traditional method, they are determining only on cost. If you look at on the monetary value, so what are the monetary benefit which we gain from a particular person or particular individuals, that will be that based on that which we determine the value of an each individual. But the name itself saying that is non-monetary value based approach. Here it is, we are not only considering the monetary value. So what we have to do, we have to consider the non-monetary benefit. That is. So take an example, that is every person as an employee, he doesn't only contribute only through a monetary value. Along with that is contribute non-monetary value, non-monetary benefit to the organizations. That also which we consider in the method of Pekin and Ogan model. So let us Chakraborty models, which we are which is suggested that us in under non-monetary value method. Evaluate human resources is aggregated rather than on an individual basis in a paradigm. So here it is not considering only on individual perspective, is considering in the a group manner, how the organizations or how the group of employees which they contributed for the employees or the organization's development. Based on that, which we can determine the value of any human resources. Along with that is the managerial and non-managerial manpower that is. So while taking a decision that is, we are not able to determine uh, the non-monetary benefit based on the decision which is taken by the managers, right? So in such cases that is, we are not able to determine the value through monetary measurement. So in such cases, it will be not considered while calculating the human resources. For that reason, Chakraborty models, which is suggesting that is the managerial and non-managerial manpower and their decision, which we have to consider in your books of accounts. Next it is, so you have to determine what is the recruitment, what is the employees recruitment, hiring, selection, development, what are the costs which we are incurred for an each individual. That should be determined while calculating the human resources. In such a way that is the Chakravarti model, which is suggested you to determine the value of an human resources. This is purely on theoretical aspects of human resources accounting. So here onwards, which we are going to discuss how to determine the human resources value by using different kinds of models. So as per your syllabus, that is, there's a two method which we are following, or which we are going for an uh, practical mode. That is, one, it is lab and squads model. That is what I suggest you. That is the most of the companies which they are following this method for determining their human resources in an organizations. Along with it is, that is what we go for historical cost method. What is the method which we can follow to determine the human resources on the base of historical cost method. There's a question. Here's the one more slide. I hope that we can look at on. That is different kinds of companies who are using HR accounting. That is like banks, HDFC, ICICI, Axis, so Infosys, Wipro, TCS, HCL, Tech Mahindra, and L&T, which they are using. Oracle Financial Services, which they are using. BEML is using. Tata Steels are using. That is petrochemical company. So that is also which they are using. Whole company which is using. In such a way that is number of companies which they are determining the human resource, or they are recording their human resources, and are they are considering their human resource is an asset. Let's take in one problem, and let's our discussions on that by using Excel. I hope that I can explain you how we have to solve a problem. So just look at these slides, and I hope that you can read any questions. So by understanding the questions, that we can easily solve the problems. I ensure that is my Excel screen is visibly in your window. That is, so first let's understand what is actually the question. Uh, the question is, Manav Limited is a firm engaged in providing management consulting services or to software companies in the country for the current year just ended. It has a reported operating profit of 1 or 2 lakhs. That is 1 crore 2 lakhs rupees. And net income is 45 lakh. The expense of the company included the cost of recruiting new consultant and training them, which amounted rupees 20 lakh for the current year. So current year, I hope that is they are made in a window actually. So the current year cost is 20 lakh. Uh, a person who joined Manav Limited stays with the firm on an average of 4 years. That is what they are predicting actually. If any person who joins for an this company, that is, he will be work on an average of 4 years. The following recruitment and training cost was incurred over the past 4 years. So the past 4 years, that is the cost which is incurred in a company uh, is they are given in a table. So just look at the table what they are given here, which they are mentioned, that is current year is 20 lakh. The present year is 20 lakh. Let's take an example. The present year to 2023, right? 2023 is in a present year that we can consider for. They are not given any years, that is. So for that reason, I hope that we can assume that is the present year is 2023. They are mentioned that is for first year, the first year their cost is 16. Here you should remember that is the first year in the sense that is 16. Second year is 15. The third year is 12. The fourth year is 10. So in such a way which they are given the value. So we have to prepare, we have to assume that is linear amortization schedule, which we estimated. Here you have to understand that is amortization. As like how we charge depreciation against physical assets. So as like that is, we will charge amortization against it might be an intangible. It is an intangible as for an intangible asset which we charge amortization. So here which we have to charge amortizations based on that which we have to determine what is the total value of an human resources in your company. So that is what which we are determining. Here it is. You have to assume that is the value of an human resource at the end of each of the 5 years. So each of the 5 years, the human resource value will be ended. The amount of recruitment and training cost amortized during each of the 5 years. So that each of the 5 years, that is recruitment and training cost will be amortized. The adjustment for the current year is current year's operating profit. What you have to do? You have to adjust it with your current year profit. Current year profit, I hope that is that is 1 crore 2 lakh rupees. That is right. So how we have to determine the value? So while determining the value, what you have to do that? So this is the window which help us to determine the value. What you have to do? You have to put year, capital amount, capitalizations amount which we can consider, annual amortizations value which we have to consider, that is the fourth year, third year, second year and first year for calculation purpose which we have to go within a descending order. The current value, current year, what is the current year? um, Current year value, that is then it is we are calculating total, then value of human resources, that is what we are calculating. So here it is, the zero is in a current year. I hope which you are aware about when we are calculating the present value. That is the current year will be which we consider as a zero. So current year which they are given 20 lakhs, right? Current year which they are given 20 lakhs. So I will take it for calculation purpose. I'll make it as an accounting. So 20 lakhs. Next first year which they are given, that is 16 lakh, right? Then it is 15 lakh. Then it is third year it is 12 lakh. Last year it is, I mean fourth year, 10 lakh. Right? So 10. How we are charging an amortizations here. So here I hope that is we can write it as in a working note one. Working note one. Right? Working note one. How we are determining. So in this table which help us to, there's a number of method which we can follow. If you look at different kinds of books, you'll find in a different way that is. I hope that is in your study material as well as the most of the books which they are suggested this method which these kinds of method which help us to determine the value very easily. That is why which we have followed this one. So here it is what we are calculating. Uh, the each year's amortizations value. So how we are calculating? The calculation is very simple. That is what you're doing. Consider plus equal here. You write 10 lakh. 10 lakh is an amount, right? Divided by how many years which you are amortizing? 4 lakh. 4 years, right? 4 years. So each year it is 2 lakh 50,000, right? So each year which you are calculating is 2 lakh 50,000. Very easy. This is very small ideology. If you're aware small ideology, I hope that is you can easily understand. 2 lakh 50,000. So each year, that is first year is 2 lakh 50,000, second year, third year, and fourth year. All the year value becomes 2 lakh 50,000. Right? So 2 lakh 50,000. So next it is 12 lakh. So 12 lakh, I hope that is because here it is 4. Everything which we have to divide by the same 4 year, which you are dividing 4 year. I hope that is here you can find the formula. So next year it is 12. So 2, that is same 4. What you are doing that is divided by 4. Then the each year is 3. So while taking 3 lakh, imagine that is you have to start from here. Why you have to start from here? Because you are giving amortizations only for 3 years. You should be very careful on that. Only giving for 2 years, 3 years, right? So fine. Next status. This is 15 lakh which they are given. How many years which we are amortizing? 4 years. So 4 years is sorry. So 4 years. That is each year you are getting 3,75,000. 3,75,000 is the value, right? 3,75,000. So here which you are considering here it is. Why we have to why we should not consider here? Because this is second year value. So 3,75,000. 3,75,000. 3,75,000 for each year. Right? So we just add for current year that is 10 lakh. So we just add it. Same formula which you can use here. And just added here. That's it. So this is the value which is added here. Next it is. I hope we ended with the second year. The third last year that is first year means 16 lakh. In 4 years. So if you divide this, you get the value 4 lakh, right? So when you are doing, you are only considering for 4 lakh. Next, sir, what about 20 lakh? We have to consider it as no. This is current year. We should be very careful. We should be very careful. This is current year. So fine. Here I hope that is we got an entire information. What is the amortizations value for amortizations value for first year, second year, everything which we are finding here. You just add this column, third column, second column, and first column. You are getting this one. So fine. So here it is 29. Same. So total. Here it is. While determining the total, what you have to do, you have to deduct this 10 lakh from the initial 10 lakh. You have to, here it is, you have to deduct from this current year 10 lakhs to your total value. Or else instead of that is you will get a negative. So you can directly take your capitalization amount minus what is the total current year value. So that is, here it is 0. Why you are not getting anything? It is 0. Here I hope that is your so that is what you are doing. 12 lakh minus 9 lakh, right? So 12 lakh minus 9 lakh is that is uh, 0, right? 3 lakh, 7 lakh, 7 lakh 50,000. So 20 lakh. That is the total becoming around 42 lakh 50,000, right? So 42 lakh 50,000. Here I hope that is you'll calculate cumulative value, right? In such a way which we have can calculate here. Same things you get here too. Right? Here things are changed. Small action. Some cases we should be very careful on calculations. So, so look at it. So 42 lakh. So current year. So this year your total value become 13 lakh 25,000. So 13 lakh 25,000 is the name. I hope that is enough. Current year. This is not current year actually. Make it corrections here. I hope that is there are small mistakes which we done. Small mistakes. Make a correction here. But start from here. Current year. So this is 0. Fourth year is always 0. So we consider this is from third year. This will be one step. This will be here. No worry, the calibrations will be different. I will make any corrections on it. I hope you got the value 3,25,000. Don't worry, that is, we'll solve one more problem. I hope you may understand a better way. So don't get confused here. Um, current year will be current year. That is total then. Total it is. I hope that is I told you. You have to add all this value. This value. Okay. I hope that is. Right. So this is the same method which you're following. Total 30,50,000 the value. 30,50,000 is the value. Next it is you are finding a difference. That is 10 lakh minus 10 lakh. What would be the difference? So value of human resources. So value of human resources for the fourth year, how we are calculating, equals 10 lakh minus this 10 lakh. So 10 lakh minus 10 lakh. So if you follow this one, you get the value around this. So 20 lakh will be remain same. 20 lakh will remain the same. So consider this 20 lakh here. So the value becomes 42 lakh 50,000. So this is the way which we determine the value. So after this is the working note one. You will go for a working note two. Working note two. That is, in a working note two, what you are doing actually. What is your total value? That is 1 crore 2 lakh, right? So 1 lakh 2,000. 1 lakh 2,000, right? Working note. What is the total earnings of it? Earnings. That is, they are mentioned that is 1 crore 2 lakh. 1 crore 2 lakh. 1 crore 2 lakh. 1 crore 2 lakh. That is the total earnings of a company. Then what you have to do? Now you have to add. What is that? You have to add actually. So the current year, what is your total value? That is 13 lakh 25,000. 13 lakh 25,000 is a human resource value of your company. So human resource value is 13 lakh 25,000. So if you add this, 13 lakh, your present cost which you are entered, that is 20 lakh. Present cost. Present cost, right? So present cost is 20 lakh. The current year cost. So put together the value becomes 1 crore 22 lakh, right? 1 crore 22 lakh. Then what you have to do? You have to less your amortized cost. Amortized cost is around, you have calculated this year, that's 13 lakh 25,000. 13 lakh 25,000. So if you do that, that's 1 lakh 8,000. 1 crore 8 lakh 75,000 will become your total earnings of a company. In this way, which we can determine the value of a company, value of a human resources. So how we are adjusting with the current operating profit. I hope that is the third question which were answered with the value become 1 crore 8 lakh 75,000 in such a way which we are able to determine. I hope I made a small confusion here between determining the value of a company. I hope that is the second problem, which I hope that you can clearly understand it. You just look at the second problem. That is, I hope you may understand a better way. So I'll use the same slide, sorry, the Excel sheet that you can easily understand. I hope they are mentioned. The current year is 14 lakh, right? 14 lakh we can consider. Then the first year is 12 lakh which they are given. Next year they are given 10 lakh 40,000. 10 lakh 40,000. Okay. 10 lakh 40. 10 lakh 40,000. Yes, exactly. 9 lakh 10,000. Okay. And fourth year is 8 lakh 30,000. 8 lakh 30,000. Fourth year always will be zero. I hope earlier we made a mistake here. Fourth year is always will be zero. Here what we are doing, the working note first one is working note one. Very simple. That is what you have to do. 8 lakh 8,30,000. That is the information which they give. How many years? 4 years. If they give you 5 years, then you can take 5 years. If they give you 3 years, then you can consider 3 years. No problem with this. 8,30,000 divided by 4 is 2,07,500. 2,07,500. Type here. Same things. 3,219 current year is the value which we can consider. So next it is 9,10,000. So 9,10,000 is for fourth year. Divided by 4, you get 2,27,500. I told you that is we should start from 2. So 2,27,500. Right? That is the value which you have to consider. Next one it is 10,40,000. Right? 10,40,000 divided by 4. So 2,60,000. Start from first year. 2,60,000. 2,60,000. 2,60,000. This is your for current year. And next 12 lakh. 12 lakh divided by 4. Some cases what happened that is you make. So because that's the first year, you won't amortize for 4 years. You amortize only for 1 year. You should not make that as uh, based on your years. You should not consider 1 year. You should consider 4 years for each and every uh, value of an human resource. Now that is current year. 9,95,000. 9,95,000 is the current year. So next it is what you're doing. You're calculating the total. You're adding everything. Same method which you're following for other 4 years. Right. Then what you're doing, you're deducting. So 8,30,000 minus 8,30,000 will remain same, zero, right? That's zero. Right? This is the value of human resources. That is 2,27,500, 5,20,000, 9 lakh. The current year it is 9,95,000. So fine. But you can add total value. Okay. Then it is you can add. So this is the value. So 9,95,000 is the total human resource for the current year. Not required actually. If you want to write it. So that is here you can add around 14,000, right? Here it is your current year value. This value which you can add. We had this 3,47,500 from your value. So in this way which you can determine. So after that is what you have to do. What is your net income in your company? So net income, that is which they are mentioned uh, in your question itself. That is, so use 23 lakh, right? 23 lakh. Then you have to add that is recruitment and training cost in the year of 2017. So that is 14 lakh. So put together the value becomes so 23 lakh, 37 lakh, which is the total value. Less what you have to do, amortization. This year amortization is current year. The current year column, I hope that is you are getting 9 lakh 95,000. 9 lakh 95,000. So that is the total value. So, 27 lakh 5,000. So 27 lakh 5,000 will be the net profit of your company. In such a way, which we can determine the value of any human resources, which the help of amortizations of human resource, historical cost method. So this is the way which we can determine the resources, human resources. So these are the two problem. I hope that is you can find it in your study material what is given by KSU. So that I hope that you can go through with that. As if you have any questions, I hope that you can drop a message here, or else I hope that you can mail us. Fine. So now we are going for the third. That is the next step. That is very important one. That we can consider it as 11 spots. That's very important one of this. People should understand that is because this is the uh, uh, this is what the companies which were using while preparing the financial statement. So let's see that is how we can determine. So before going for elaborate Scotch model, I hope that as I told you, this is the method like you determine the value uh, using that is a net present value method. It's the same method, same ideology which we are using. Let's see that is how we can determine that. Right? Okay. Okay, read the question that is. So from the following details, what are the information which they are given? So from the following details, compute the value of human resources of an employee group with an average age of 58 years. Their average age is 58. Their retirement age is 60 years. So 60 years minus 58, I hope that we get here 2 years of time. Let's see that is what we can apply formula, and I hope that we can go. Just look at here. I hope I'll go for an sheet 2. Here it is. What are the information which they are given? What is that information which is given? Let's see. Annual earnings. So annual earnings. Annual earnings. Annual earnings. Uh, they are given 20,000. 20,000. Okay. 20,000. Right. Next it is age of retirement. Age of retirement. I think RET. Right. So average age. Average age. That is, they mentioned 58. Fine. Average age is 58. Cost of capital. What is the cost of capital? Cost of capital. Cost of capital. That is what I said. That is discounting factor. What price which you have to, what rate which you have to discount. That is 10%. Consider 10%. Right. Next one. The number of employees. How many employees are there? Number of employees. Around what's they saying? They're saying it is 10. This are the information which they given in their problem. I hope you can remember the formula what I suggested you to uh, find the value of an human resources by using Levant's parts model. 1 into t divided by 1 plus r to the power of t minus r. Right. So here the formula is very simple. How we have to calculate. What is the annual earnings? Annual earnings is 20,000. Annual earnings is 20,000. So annual earnings is 20,000. divided by 1 plus r. That is 1 plus r. That is 1 plus r plus 10%. 1 plus r means 1.0, 0.1. So 1 plus 0.10. Here it is, we should be very careful. That is, the formula is 1 plus 10.0. So that is, you have to deduct retirement age minus your average age, right? 60 minus 58. Okay, this is one. 60, 58 means there is a 1 year more. That is 60 minus 58, 2. So next there is a 1 more year, 2 years that the particular person is working. Then you can consider 20,000. Again, 1 plus 10. I hope I can copy, make it a paste control. Okay, instead of 58, what you do next year it is 59. So in such a way which we have to write. So make it plus how you are determining the value in NPV. 20,000 first year, second year 20,000, then you can make it plus, right? So if you simplify this, 20,000, right? So divide by 1 plus 0.10, that's 1.1 to the power of, that is 60 minus 58, that is 2, right? 1.1 to the power of, that is 2, which they are considering. Next it is 20,000, same, that is a simplifying that is 1.1 to the power of, we are doing that, to the power of 1, that is why 60 minus 59. So I hope all of you, that is, I hope you are aware that is how you determine the value of 1.1 equals 1.1 into 1.1, you get that is 1.21. So if you simplify this, 20,000 divided by 1.21, right? So that is very simple, 1.21 divided by 1.21, you are getting 16,528. Fine. So next it is the same, 20,000 plus 1.1, because 1.1 into 1.1 will be get same amount, right? So 20,000 divided by 1.1 is 18,181. What you have to do? You have to add it plus this one. So the one person's value, the one employee value becomes 34 lakh, 34,710. So how many numbers are there? 10 numbers. So multiply by 10. So equals 34,710 into 10. That is, your value becomes 3,47,107. This is what the Levin's cost model suggests you, that is, if your company have a less number of employees, this is the method which I hope that you can easily determine that. So there is no different kinds of age group. This is hypothetical questions that is you won't find in any companies, because can you imagine that is only two person which is working in an, sorry, 10 employees which is working and their age is 58. So definitely not, right? So that is, it is hypothetical for understanding the concept. So in this way, this method which we can determine the value of an company. Let's, for better understanding, let's take an example. The same method, make it average age is 57. The value is same. Average age is 57. In that case, is what you have to do. So in first year, first time itself, that is, you have to make 20,000. Here it is. The formula is 1 plus 0.10, 60 minus 58. Instead of 58, what you have to do? You have to put 57. 57, 1.1 to the power of 3. 1.1 to the power of 3, right? So what you have to do? Sorry, I made a mistake. 1.1 to the power of 3 now. So when you divide it from 20,000, what you have to do? That is, you have to make equals 1.1 into 1.1 into 1.1. The value become 1.331. So if you take it as a consideration, 20,000, 1.331, that the value become this much, that is 15,026. So 15,026, which you add this, you add, I hope that is, you may find it. Because I took an example, that is if you have a 57. If you want, you can make it as a 56. If you want, you can make it a 55. You can make it in a 54. In such a way that you can calculate as like you are how you calculate it in net present value. So this is the one method which we can follow for determining the value of any human resources by using Leibniz cost model. So if you want, you can put it as a 56. If you want, you can put it as a 55. No issue that anything is okay here. So let's move on for an understanding, you can go for different kinds of problems that might ask in your exam. I hope that is not much important that I have completed this. So let's move on for this. Uh, Here the question is, they are given a question from the details present below. Determine the value of human resources to Take Care Company Limited. The Take Care Company. The company name is Take Care. 11 Scott's present value of future earnings model. Here it is. I told you that is when I discussing on an 11 Scott's model. In the 11 Scott's model, we will separate it based on the age and based on the efficiency of a company. So here it is. They are divided their employees in four different ages. That is, should be very careful while understanding this one because when we have an interval like this, we are not able to follow the method what we have followed earlier. You have to understand in a better way. Let's see. Here there's we have four different kinds of age group of employees which they are working in an organization. That is, they are divided from 25 to 34. That's 10 years interval period which they are given. 25 to 34 is in a one group, 35 to 44 is in a second age group, and 45 to 54 that is the third age group, and 55 to 64 is a fourth age group. In such a way which they are divided, and along with it is the annual earning per employees. 25 to 30 it is 64, 66, 75, 900, and it's one for 91,080. That is the information which they given in the table. Fine. Uh, Average age of the employees is 25 years. So what we are doing, what we are assuming that is the average age of an employee is 25, which we are not considering that is some of the people who are come under the age of 25 to 34. There's a different kinds of age group may be working in the department that is maybe 25, 26, 20. Everyone will not be a 25 years age, right? So definitely, if you are doing an interval from 25 to 34, you'll find different number in their age, right? So, but for a calculation purpose, what we are doing that is we are assuming that is the average age of an employee is 25. Retirement age is 65. That is why they are ended with 64. If they enter for 65, I hope that will be real. What is the discount rate which they are considered is 10%. What is the method which you can follow? If you follow the same formula or if they follow the same method, just imagine that is what you have to do. You have to do everything is 10 times, 10 to 10, 20, 30, 40. The same method which you have to do 40 times for calculating. Even if you calculate in such a way, you get the same value. That is a different issue. You have to go for a more calculation. But let's see that is what way which we can use for determining the value. What we have to do first. Uh, Here it is. We required a present value annuity factor to determine the value of an human resources for these kinds of problem. We have to determine that is the very most important one. It is you have to know that is how to calculate present value annuity factor. Present value annuity factor. I'll tell you that is what is present value annuity factor. Uh, if you are if you use that method for these kinds of problem, how we can use it. So first we have to know that is how to we have to prepare a present value annuity factor. Yes, obviously that is if you want to calculate present value annuity factor, the formula is quite difficult. You are not able to remember that is. But I hope that is you all aware that is present value calculation or discounting factor calculation. That is very simple. Now we are calculating for 10%. So you just calculate that is 1 divided by 1.10. That is the method which we follow. That is what I said. 1 rupee that is divided by 1.1. That is 10%. I'm saying. So what is the 15%? I hope that is you can go for 1.15. 16%, 1.16. Very simple, right? So now it is my discounting factor is 10%. So I took that as 1.10, 1 divided by 1.10. So this stuff this is I need this for one. So this is for first year. How many years are there here? 10, 20, 30, 40. So till 40 years we required an annuity table, present value annuity. How we can determine? One, you have to take present value annuity factor table. That is must if you want to calculate Lavin Scott's model. Otherwise, if you are if you have an ideology of determining the value through the help of your calculator, that is, if you allow to use your scientific calculator, I hope it is very easy. You can easily determine. If it is quite difficult, then what you can do, you can follow this method. So same, so divided by 1.1. That is, you just copy the same formula till 40 years. Um, for I hope that is calculation purpose. Um, while you are practicing, I hope you'll find it in a Google, or else you'll find it in a present value table. Or in an exam, or if you have to calculate, then I hope they can follow this method too. Fine. What you have to do? You have to add everything. You have to add, right? So this is what present value annuity factor table. Take it out in your present value factor. That is also you will find the same. Right? This is what present value annuity factor table. Present value annuity factor table. Yes, there is a number of formula which we have to determine that is. Uh, in, in this case, if you know the formula, I hope that you can easily calculate. Otherwise, you just take the present value table to your examination solve. I hope that you can easily solve. No issue. Fine. How we have how we are calculating the value, how we are determining, right? First, we required an I column. That is present age. Should be very careful because the logic is quite different here. Uh, Number of your services. Each age. Okay. Then it is annual earnings. Annual earnings. There is a third table. I hope it is little bit better. Number of your services here. Annual earnings is over. Next one is present value. Sorry, annuity factor. Present value factor. Present value. Okay. The last one it is present value. Present value. Okay. I hope age group is very easy to determine. That is, they're given in a question that is 25 to 34, right? 35 to 44, 45 to 54, right? 55 to 64. They are given. Number of year services. I hope that is you can find it in 10 years. Annual earnings they are given in their question itself. That is you can easily determine. Right? These are the information which they given. So here the problem is you have to determine the present value factor table. So what is the present value factor table? How we can determine it? Fine. So what is the meaning of this question actually? So we have a 10 number of employees that is they are working in an organization. Uh, in that organization that is they are getting regularly 60,000 annual salary for each employee for 10 years. That is 60, 60, 60, 60 for a 10 years which they are getting. If any person particularly working in an organization, 10 years, he getting 60,000. So what you have to determine the present value of 60,000. Yes, there is a method which we can follow each month which we can determine 60,000. No problem. An example from 5 to 15, right? 10 years, 60, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, 10 years. Then I hope that we can go for a discounting factor for first 10 years. I hope that is we have here. First we get the same, which we multiply, which we get a value. Fine. So instead of that is, if you multiply here, okay, let's look at the 10th year annual factor. What is that? 6.14. You just multiply 6.14. 6.1. If you multiply with 60,000 into 6.14, you'll get 3,68,640. This is the value. I hope that is you can take an entire value 4 6.114 or make it to 1.5. 1.5 round figure. That is you got a present value factor. What is that is 10th year present value factor. Why? Your interval period is 10. So I hope you get the same here too. So, just look at here. This is almost the same. This is the same method, but just imagine that is if you are a discounting factor, present value analytic factor, that is, you can easily multiply with that one, right? So instead of going for all in these kinds of calculations, this is what we did for a small problems. That is, if you are at 2 years, 3 years, 4 years, I hope you can follow this method. But if you are the number of years is more, that I hope that you can easily multiply with annual factor, annuity factor, present value annuity factor, and you can determine the value, present value factor. Fine. So next one it is, here it is 35 to 44, that is 20 years, right? So this is 10th year value. So don't confuse here. This is not this one. 10th year, 6.14, right? I'll make it dark. Okay, 6.14. And 20th year. Where is 20th year? Year. 20th year, 8.51. Here the question is, you should be very careful. So what we are doing here, should be very careful here. What does that? One person, the particular person, is joined organizations in the year of 25. 25 is joined. 25 to 34 years age is getting 60,000. But that next to 66,000 is getting it from 11th year. You should be very careful here. Should be getting from 11th year. So 11th year to 20th year. Now we are taking 8.51. 8.51. That is, I will consider 4. I will make a round figure. 8.514. So this 8.514, which we can directly multiply with 66,000, when you are getting a 66,000 from first year itself. From the first years, if you received 66,000, then I hope that you can easily multiply with 8.5 and you can calculate present value. But in this case, in your problem, you're not doing that one. What you're doing actually, you are considering, you are calculating, you are determining that is first 10 year you're getting only 60,000. You're not getting 66,000, right? So in that case, first 10 year discounting factor, which we have to deduct from 20 years present value factor. What does that is? 66.145. 6.145. So 6.145, what is your discounting factor? If you deduct, then value become 2.369, right? 2.369. 2.369. Sorry, 2.369. So if you multiply 66,000, finished. That's around 1,56,354. Then I hope now you are understood. Let's take that. Next to this 30 years. Let's go for 30 years. What is the 30 years? Your present value factor is 9.4. 9.426, that is they are considered. Okay, 9.4, we are taking 4 to 7, which we can consider. Yes, 4 to 7, round figure. Then what you have to do? You have to deduct 8.514. Why 8.514? Because 0.9. Because you are not receiving the annual earnings of 75,900 from your first year. You are receiving that 75,900 from your after 20th, right? So that is why you have to deduct that. That is 0.913. 0.91. 0.9. 0.9 to multiply. So we'll get the value of 69,267. So next 40th year, same method, no changes. 9.779. Okay. Next it is 9.427. Method 0.352, 0.352, right? 0.352. 0.352. You might get this. Yes, that is, you are getting 32,060. Add this. Value becomes 6,26,000 4 times. Or if you make that as 6,26,411. This is 4.10, right? You can make it as for round figure 6,26,411. So 6,26,411. So if you just look at your question, that is how many employees are working in your company? 500, right? So 6,26,411 into 500 company means 500 employees. So each employee's value becomes the total value becomes this much. I don't know exactly what is the value which we are getting. 31 crore, 31 crore, 32 lakh. I hope that is if I convert it for an rupees, I hope I can easily tell the value. 31 crore, 32 lakh, 5,500. 32 lakh, 31 lakh, 32,000, 5 lakh, 5,500 will be the value of your human resource in an organization. In such a way that is which we are able to determine the value. So just imagine that is the same formula problem which we are determining. Um, I won't make any changes here. I'll go for a sheet 3, sheet 4. Same thing. I hope you are getting the same value. Look at here. So I will explain again the thing. First, what you're doing that is you should have a present value and its factor. So present value and its factor, how we are calculating? I hope that is if you first you can go for a discounting factor calculation. Why I'm not going to be the present value and its factor? Formula it's a little bit difficult, right? So no problem. That is if it is difficult, we can make easy ourselves. Right? It's not a big difficult for us. How we can determine present value and its factor? First, we are calculating present value. How we are calculating any numbers that is equal 1 divided by 1.10. You are considering 1.1 to 12% is discounting factor. You can consider formula. So fine, same divided by 1.1. So what we have to type in your calculator? Take 1 divided by 1.10. If it is an discounting factor is 10%. You can divide it. Again, what is the value which they are getting? Divided by 1.10. Then what is the value which you are getting? Divided by 1.10. Same method. What is the value which you are getting? You just add it out. That is what I did here. That is what present value annuity factor. I hope that is if you check it out with your present value annuity factor table, you will find the same thing, right? So next, what you have to do that is, if it is an interval period is 10, you are considering for a 10 years. If interval period is 5 years, then make it for a 5 years. No issue, no changes. Everything is same. So anyway, that is. So now I hope that is you have a present value annuity factor. Okay, you are calculating present value annuity factor till 40 years. Sir, why till 40 years which you have to calculate? Because the difference between the average age of an employee minus retirement age is 40. That is 65 minus 25. You got 40 years. For that reason, you have to calculate present value annuity factor till 40 years. That is the ideology. Okay. So fine. Now we are calculated with present value annuity factor. We have in a table. Fine. After this, what we have to do? The information which is given in your question, that is 25 years, the number of years, 60,000. These are these 3-column information which already they are given in your formula, sorry, in your problem itself, right? Our work is just we have to determine this one, present value and its factor. So we already prepared a table. So just go for it. What does that is? 10th year. What is the 10th year annuity factor? 6.145. Annuity factor is 6.145. So 60,000 into 6.145, your value becomes 3,68,700. Right? Fine. Next it is 66,000. I hope here you make a mistakes that is. So actually in 20 years, discounting factor of 10% present value annuity factor is 2.369. Sorry, it is 8.51. But you consider it as 2.369. What is the meaning of it? What is the ideology of what I used here? The ideology is very simple. What Live and Scott suggest you that is the person who are working in an organization the age of 25 is earning 60,000 for 10 years. After the 10 years, he is getting 66,000, right? So that 66,000 value is only which we are getting after 10 years. But the discounting factor, what you consider, 8.51, the present value annuity factor, 8.51 is for 20 years. But in this case, we are not receiving 66,000 for till 20 years. We are receiving after 10 years itself. Right. So for that reason, what you have to do, we have to deduct from it. Deduct your discounting factor from your previous discounting factor, that is the interval time. That is the interval is 10 years. In that cases, your present value factor is 6.14. So 8.51 minus 6.14, you got 2.369. So that is what I took here, 2.369. The next one it is 30 year. So going for a 30-year value, 9.4. 9.4 minus 8.514, 0.913. Very simple. 9.779 minus 9.4. That is your 30th year. Okay. So if you deduct it, you get 0.352. If you multiply, you got the answers. The answer is 31 crore, 32 lakh, 5,500. Very simple. Very simple concept. So fine. So let's have a different discounting factors. Just assume that is if in your exam, if they gave you any discount different factors, what we have to do? I hope that is I'm not able to take it out. Let's take an example. They are given you around 18 years. Just assume that is for calculation purpose. What I do, I will consider this your retirement age is 45. 45. So in that cases, I will only go. I can end it up with 20 years itself, right? Okay, 20 years. So retirement age is 45. So this is the information is not required. It is my tentative questions. Don't get confused here. Okay, this is this 20 factor is not necessary. You have to calculate. And let's assume that is I'm taking retirement age is 45. The same questions. I hope that we can change a numerical value. So fine, 60,000 instead of 60,000, I'll make 50,000, like 70,000. Okay, annual factor is 50, 70,000, but your discounting factor is 18%. 18%. How you have to calculate? So what I said to you, that is how we can easily calculate divided by 1 divided by 1.18. Okay. Same, you can divide it by 1.18, you'll get a discounting factor. So just copy and paste in place. In Excel, I hope the calculation is easy, but when you go for a calculations in your, especially your calculator, it doesn't make you that much easy. What you have to do, you have to use your present value annuity factor table. This is the value. This much which I gave. Fine, it is. So this is the annuity. You can, if you want, you can check it out in your present value annuity factor table. So you'll find the same value. Fine. So your present value annuity factor table, that is what it is. First 10 year. 10th year, it is annuity factor 4.49. What you have to do? Just type 4.49. Oh, okay, 4. So that is the value. What you have to do? You have to multiply it. Multiply. Yes, okay. What is the value? 2,24,700. 2,24,700 become your present value. Next it is. So next 20 years. So I'll make it dark. Look at it. Next year, this is 4.49. Fine. 4.494, which I consider. This is 20th year. So what I used to do? 5.352 or make it 3. This is 4.494. I have to deduct it minus 0.859. 0.859 into 0.859. So your value become 2,84,830. 2,84,830. So consider it as 2,84,830. If you multiply, if your employee is 500, your value become 14 to 24 lakh 15,000. So in such a way that is which we are able to determine. So if you have a present value and factor, it is quite easy to determine. So this is the method which we can follow on determining the value of human resources. I hope in your study material there's a number of other problems which I seen there. So I hope this is the one method which we can follow and which can end it up human resource accounting. Uh, let's take an example. I hope before that is you have to understand why I used a present value factor in sheet one also. That is, let's take sheet two. Here, this is the formula, right? This is the first problem which I used. Is the 58? I had 58, right? Or if you want, I can make it 57. No issue. 3 years. 3 years, 10%. 3 years, 10%. I hope we can consider an annuity factor. Did we get the same one or we get a different? I hope that right. The present value annuity factor for 3 years is the value. It is 2.48. What is your regular value? 20,000. Multiply. Just see there. Do you find any differences here? Same. See, right? The value becomes same. Just look at 2.48, right? Where I get 2.48. The third year, 2.48. We're getting the same, right? So this is the way which we can determine instead of going for this method. If you find this is difficult, forget about this. Don't go for this. But you can do that as 20,000. Calculate your annuity factor. Multiply with that as you'll get a value. Here you have to understand that is how we can determine a present value. Just assume that is very easy, right? If it is a fourth year, 4 years, just assume that the value become different. For 63. If you make fourth year here, then the value becomes the same. I'll show you that is no issue. It was 1.1 into 1.1 into 1.1 into 1.1 four times, right? So if you divide it, sir, why it's not changed? Because you are do not consider that value of y. You find any difference? Even you're not finding any difference. This is the way which we can calculate your value. Let's see with your fourth next problem actually. They're given they ask in your exam. They might ask in your exam. What is that question actually? So from the following details using live and spots model, compute the total value of human resources to the employee group, skilled and unskilled. Earlier classes means earlier problem which we are discussed only skilled or only unskilled. Yeah, they mentioned both the method. They are given skilled and unskilled. How we can calculate? So if you want, you can put it in a table itself. What is annual earnings? Fine. Annual annual earnings. These are annual earnings. I hope you can here we can make skilled, unskilled, skilled it is 50,000, right? Unskilled it is 30,000. Is the information which they are given. Yes, okay, fine. Age of retirement. Age of retirement here it is age of retirement. Retirement. That is they are given 65 for skilled employee, 62 for unskilled employee, right? So 65, 62, fine. Average age, which is very much important, we have to consider average age. Average age. Average age. Average age. But they mentioned that as average age, it is given 62 years, right? 62 years. This is 60 years, right? So here you just deduct it. 65 minus 62. That is 3 years. Okay. I hope we can consider it as remaining services. We can consider 3 years. Here it is 2 years. Right? 3 years and 2 years. Remaining services 3 years and 2 years. Annual earnings is 50,000. So I hope that is if you want you can skip the year 50,000 and 30,000. What they given that is your question they said 15%, right? 15%. This is for 3 years, this is for 2 years. What is the annuity factor? Present value annuity factor for 15%. So 15%. How we can calculate? You want to look at in your present value table? No, that is I shown you in a small method, right? For 3 years, I hope that you can easily calculate 1.15, right? That is again equals. Okay, go for divide by 1.15. Finished. So make it for maximum. It is for 3 years, right? Okay, add it. You get a value. Very easy. Here it is first year, first second year. Get in a value. It is 1 point. It is 2.28. 2.28 T. One value. That is. Second one it is 1.626. I forgot it. Right? Yes, exactly. Value of an employee. We can do that. Very simple. You just multiply this two. But value become 11,000. Sorry, 1,14,150. So number of employees. Number of employees. Your question that was they mentioned 20 and 25. So 20. This is 25. This is okay. So multiply with that one. So for holding terminology, which make it as numbers, right? I love you. Values. Okay, I hope that was. So the value become 2 lakh, sorry, 22 lakh 83,000, 12 lakh 19,500. So this is because this is become your uh, value of an human resources. That is for skilled, it is 22 lakh 83,000. For unskilled, it's 12 lakh 19,500. So in this way, that you can determine the value of an human resources. Now, if you want, I hope that you can make more problems on this. One more problem which we have not calculated. Here it is 20,000, 60 years, 10%, 50 years, which we calculated. If you want, you can make it as a just look at here. If you have a number of skilled, unskilled, semi-skilled, then the method will be goes different. So not that much important here. Let's look at. I hope that we can go for this one very easily, very few seconds. I hope that we can complete. So what they given that is 58 years and retirement. Sorry, this is the average age is 55 years. Retirement age is 58 years. 3 years, right? 10,000 for 3 years. What is the percentage which you given? 10%. Which we already calculated, right? So 10%. Where is 10% here? Which we have 10%, right? 10%. Just keep it out this one. 3 years, right? Let's look at here. 10,000. Fine. How many years? 3 years, right? This is the question. 3 years. 55 years, which they have a number of employees is 20. Fine. Cost of capital is 10%. Yes, 10%. Fine. What you have to do? Very simple, right? Now I hope you are understood. 10,000. What you have to multiply? Total discounting factor 2 point. Become 24,000 into what you have to do? You have to multiply with this one. So 4,97,370 or something else. Got the value. Here it is 10,000. There it is 20,000. Here it is 10,000. I hope that you can. This ends your human risk accounting calculation. These are the questions which you can expect. But as per my ideology, I hope that is in Levin Scott's model is the best model which the most of the companies which they use. And I hope you can easily understand each and every method. If you know how to calculate present value unity factor, other things is very easy. You should know the basic mathematics. I hope that you can easily determine. So if you have any questions, I hope that you can contact. So now I am moving for the next topic. That is the most of the things is which we have only theory. That is instead of that is I am going for a practical. That is yeah I am directly moving for inflation accounting. Uh, instead of that's theory, I hope that you can easily read, no problem at all. That's in the case of practical, it is quite difficult to what is that is understand by looking at any study materials. I hope that we are not able to understand. So for that reason, what I do, I'm directly skipping other topics. The number of topics which we have in your syllabus, that is government accounting, that is we have a logics of intangible assets calculations, right? So instead of that is I'm going for a price level changes. This is what the two topics which we have in a practical. For that reason, I'm focusing on that one. What is that? Is price level changes, or which we can consider it as inflation's accounting. What is that actually? Inflations means, in general sense, that is decreasing in the purchasing power. The consumer purchasing power is decreases. What is this ideology? How this impacts the financial statement? I hope in last class I even told you in very few seconds, which I discussed about inflation's accounting. When it's discussing about the role of an accounting, there I said actually how that the inflation which impact an individual and how it impacts our company. There is a price level changes accounting in the sense that is increase or decrease in the purchasing power of a money over a period of time. The accounting which consider price level changes is called accounting for price level. So if you are adjusting those kinds of changes in your books of accounts, those adjustments of account we call it as a price level changes. It's very simple. Here we have to understand how it is impacting. If you understand that one, I hope that you can. I hope that you can resolve all kinds of problems. What is that? What is the ideology of that one? So in an inflation accounting, why we are adjusting in a your financial statement means you have to remember the one of the concept which we were used while preparing a financial statement. Most of the time, what we think that is actually uh, preparing a financial statement is an ultimate job of an accountant or accounting student. So that is what we taught by in our earlier studies. Actually, your degree or two, that is the same things which they are taught. Actually, accountant means they have to prepare a financial statement. Actually, it is not. It is not the ending process of an accounting. Actually, accounting means the accountant should know how to prepare a financial statement. Anyone can prepare, any person can prepare a financial statement, no problem. That is, you people, you know how to prepare a financial statement, you know balance sheet, you know profit and loss account. But if any person asks the questions, how we are prepared, why we have to prepare? If you ask questions, why you have to record both debit and credit, why your balance sheet balances, right? So in such cases, why you have to go for an provisions, why you have to go for an reserves, what is liability, what is asset, what is expenses, what is income, why you are preparing a trading and profit and loss account separately and net profit and loss account is separately, what is the reason behind it? If you ask these kinds of questions, so none of them I hope that is they're able to answer the question, because we all aware that is We have a format for that. Based on that, we prepare a financial statement. There's a different issue. So, as an accounting student, you must understand that as without any concept conventions, without any guidance like accounting standards, without any institutions like ASB, ICAI, MCA, or NEFRA, I hope that is we are not able to prepare a reliable financial statement or qualitative financial statement. So why we have to look at our the concept while understanding price level changes accounting? So here we have to identify the one concept that is uh, which is very important for preparing a financial statement. That is money measurement concept. So what is the relationship between money measurement concept to inflation's accounting? The money measurement concept, I hope you all are aware that is what it says. The money measurement concept says that is any transaction which is taken place in your company, if you are able to measure through money, those transactions which you can record in your books of accounts. That is what money measurement concept says, that is any transaction. But the money measurement doesn't stop there. It continues with, it says that is we are ignoring, that is that concept ignores general price level changes in an economy. That is what the second version of money measurement concept. Most of them they stop by reading the concept called or by understanding the first two lines or first basic assumptions of a money measurement. Why inflation accounting introduced? Because of the uh, assumptions of money measurement concept. It says that as we are ignoring price level changes accounting, or we are ignoring general purchasing power changes which taken place in economy. For adjusting that, what we are introduced inflation's accounting in your financial statement. Why we have to adjust? There's a question which arises. Let's take an example that is, I hope that is when you are studying a present value, future value, a time value of money in a financial management. I hope that is in a statement which you are learned. Today's value is more than tomorrow's value. That is the concept which you have studied. What is the ideology of that? Let's take an example. If I give you 10,000 rupees today, the same 10,000 rupees which I'm offering after 1 year, do you think that is the both the 10,000 have the same worth, same value? So if you look at in the monetary term, in the monetary term, yes, both the 10,000 is same. But if you look at the worth, the value of the 10,000 rupees is totally different. It is like when you're thirsty, the importance of water is different. When you are not thirsty, the importance of water is totally different. It is like I hope that you can uh, relate that example with your inflation account. That does, if you take 10,000 rupees in the beginning, you would have purchased something more than that. Take an example, you have purchased a mobile phone which cost of 10,000 rupees in the early stage. After 1 year, or if you are you invested 10,000 rupees in the bank, you would have earned 10% or 7% or interest in the bank at the end of the year, right? So in accounting also, let's take an examples of debtors. Your debtor, your customer, just assume debtors. If they take a credit of rupees 10 lakh in your company in the beginning of your financial year, till 10 months or 11 months which they are not paid, until in your financial statement you are considered it as 10 lakh, do you think that the both the 10 lakh which have the same value? If you ask me, that definitely no, there is a different. For adjusting this, which we are used inflation, which we are using inflation's account. So here the question, what is the objective of using or adjusting price level accounting? That is it gives a fair and truth financial positions and operations result. What is that as, if you're not used inflation's accounting, it doesn't provide any realistic value. For that reason, which you are following price level accounting. And it gives a strengthen, it gives a reliable information to the stakeholders. In that cases, I hope that you can, there is a stakeholders, they can take uh, decisions rightly. Then by adjusting price level accounting, that is your real worth of a company which shows. That is what exactly the worth of a company. Next one, it is maintenance efficiency in operational business. So the effectiveness in an operational business, which is increases that is. Ensure that business has adequate funds to replace asset. So let's take an example. There's some cases what happened that is, especially on land. What we considered as 10 years back, which were purchased on land with a cost of rupees 5 lakh. So after 10 years or 15 years, by holding that as we have sold it for 15 lakh. What we consider in the books of account, so we have purchased at 5 lakh and which are sold at 15 lakh. We consider 10 lakh is a profit. But what is the real profit which you have to determine? What is the worth of a 5 lakh in before 10 years is totally different from the worth of a 5 lakh present. Fine. So we can directly deduct it from that. So if you do the adjustment of inflation, that is, you'll find a real value. You can ensure that is what are the funds which we can replace in your company. So those things which gets a benefit out of your price account. Now, what are the advantages which we are getting? We can easily compare. We can maintain real capital actually. So reduce on misleads. That is advantages which we are getting on inflation accounting. Actually, that is what I said. How we go for a mislead. So we show in your books of account, if you're not adjusted inflation accounting, what happens that is? You say that as your purchase land for worth rupees 10 lakh last 10 years back. After 10 years, you have sold it for 20 lakh. You show it as 10 lakh as a profit. The stakeholders, they doesn't know what is inflation or something else. That is, what they will do, they directly consider 10 lakh is a profit. So they see that is the company is performing well and they invest more and more. So after 1 years or 2 years, they come to know that is the company is not performing well. It's shown on a mislead information. So then they will take back their investment. So these are things which happens if you're not adjusted inflation accounting. Social image increases, investment market which is increases. So these are the maintenance which we may. These are the advantages which we get by using inflation accounting. The disadvantages. What is like an alteration that is in a deflation period which we are not able to determine the deflation's value in your financial statement. It's quite difficult on determining the depreciation of a company. Some cases what happened that is most of the company, if it is a positive, then they will show it in books of accounts. If it is negative, they won't show it. That is window dressing may mix mode. Then complications. The methods are very difficult to determine. So some natures of items which we are not able to determine it exactly. So that is the quite problems which we face while using an inflation support. What are the types of inflation method accounts which we use? That is CPP, current purchasing power method, and CCA, current cost accounting method. These are the two methods which we use for determining the uh, or adjusting the inflation's value in a financial statement. So current purchasing power method, which is purely uh, adjusted with the index price, the index value. What are the general price index, which is given by the uh, authorized institutions. Based on that, which we adjust, which we convert it for a real value. So I hope that is while going for a calculations, you may understand what it is. CA method is totally different. That is, we'll go for a different method, like a gearing ratio, which we determine. We'll go for a working capital value, which we determine a different way. Then we go for a depreciation adjustment in such a way which we adjust for in a balance sheet and which we determine the value. So let's see one by one, that is how we can calculate CPP method and on what way we can uh, adjust your balance sheet by using CCA method. So let's take an example, that is the what I said at an example, that is if a company purchased in the land in the year of 2005, the worth rupees 5 lakh. In that year, the general price index was 150. He sold the price land in the year of 2022 for rupees 11 lakh. And the general price index was 400. Calculate the profit and loss on the sale of a land. So this is the question. If a layman, if we look at the question, that is, it directly says that is 11 lakh minus 5 lakh, 6 lakh is a profit. But what it is that is a true? Let's see that is by calculating the value of an assets or by determining the uh, by let's calculate is that the company is earning a profit or loss. I'll go for a next slide, next sheet, sorry. So what are the information which they given in their question? That is very simple. In the 2005, they purchased 5 lakh land. Index is around 150. Okay. So 2022, we have purchased in that year, the index is 400. Right. So what we have to do? First, we have to identify the present value. Now we are in 2022. If you want the 2023, no problem. But we have to change index. So it is a tentative. I hope we can resume that for 400. The present, right? This is present. This is for understanding. Don't write it in an exam. It is a present. It's for understanding. 2005. What you have to do? We know present value. We are not able to compare present value with the past value. Definitely not. We are not able to compare it, right? So what you have to do? One, we have to convert this present value into past value, or we have to go for that is past value into present value. That is what we have to do. Otherwise, what we say that is future value into present value or present value into future value. That is what we have to do. Here we are not able to convert that is 11 lakh into past value. That's 2005 year value. For that reason, what you are doing that is you are calculating that is the previous year value into current value. So while calculating, what you have to do that is 5 lakh. You have to consider 5 lakh. Then you have to convert it for present period divided by 150. Right? That is we have to do. That is 5 lakh into 400 divided by 150. That is what we have to do. So if you calculate here into 400 divided by 150, then the value becomes 33 lakh 33,333. The value becomes the present value of the worth of 5 lakh rupees in the year of 2005. The 5 lakh worth rupees of 2005, the present value of that 5 lakh rupees, if the index value is 150 in the year of 2005 and 400 in the year of 2023, then the value becomes 33 lakh 33,333. But you are sold at much. Sold it at 11 lakh. For that reason, you incurred a loss of rupees 2 lakh 33,000. So, but basically, if you show in your books of account, if you're not adjusted these kinds of calculations in your books of account, there is a chances of overestimating your financial statement. When you overestimate your financial statement, that provides a false information to the stakeholders. That is what they will do. And I hope that is you violate the conventions of conservatism. That is prudence conventions which you violate. So for that reason, which we have to adjust inflation's accounting in your books of accounts. So this is the way what we can do. We can determine uh, or we can adjust the inflation's account. Let's go with another problem. That is how we can determine monetary gain and losses of an uh, monetary gain and losses of an company. So let's take a question that is the question saying that is you have to calculate net monetary value. Net monetary value. Net monetary value. Monetary value. The information which they given cash, right? Well, cash for debtors and creditors, loan. Therefore, loan. Therefore, different information which they given. Along with it is 2000. I hope we can take 2022, 2023, no issue. Any year which we can take. But the index value which is very important. 20, 50, 70, 30. 20,000, 50,000, 70,000, 30,000. Right? These are the information which they given. In 2023, I hope it is 25,000. Just take it as 25,000. It is 25,000. And then 60,000, 80,000. And it is loan. It is 30,000. So here itself, I'm taking an index value, index. This, what they're doing, that is opening which they given 200, average 210, is closing it is 230. Opening, average, and we can consider it as closing. Here you have to understand the logics of inflation accounting here. If you understand that one, then only I hope that is you are able to determine. So first you understand this is current assets, right? I put it in different color. I hope that you may easily recognize it. So this is current asset. This is current liability. Loan, I hope that is term loan we can consider it, right? Current assets and current liability. Just imagine that is if you are holding debtors cash in your company, then the value of an cash or the value of an cash which is decreases. In the same way, if you are holding creditors, take an example that is if you are took a credit from your suppliers, that is you said that is in the year in the beginning year it is you are taken 1 lakh rupees as a credit from a company, that is you are paying that 1 lakh after 6 to 8 months, that is just imagine that is you are paying that 1 lakh after 8 months, that is yeah, that 1 lakh which is fixed in the beginning of year, but you are not paying that time, you are paying after 8 months, so you can utilize that 1 lakh rupees till 8 months. After that you can pay it off. So there you get a more value from it. For that reason, what you have to do, you have to first we have to consider in your books of account, that is current liability which you have to consider first. What is the current liability? Here it is creditors is a current liability, that is 2022 means this is opening value, this is closing value, right? So what is the opening value here? I hope that is credit. Instead of going for an calculations of an current liability separately, what you can do, you can merge it with data side loans, that is 70,000, 30,000 is 1 lakh, right? So 1 lakh fine. Uh, this is closing 80, 30, 1 lakh 10,000. So 10,000 additional. What you can do? This 1 lakh which we have to what you have to do? We have to convert it for closing value. The 1 lakh. So 1 lakh what is opening? That is 1 lakh into 230 divided by 200. That is what which we have to do. 1 lakh which we have to calculate. One lakh which we have to convert it for uh, closing value, right? So that is 230 divided by 200, right? So if we calculate that one, 1 lakh which we are converting for 230 divided by 200 closing value, that is 1 lakh 15,000. The value become 1 lakh 15,000. So 1 lakh 15,000 present it is 80,000. That's closing value 80,000 plus 30,000. That becomes, I made this is 10,000 for that reason. You are getting 1 lakh 50,000. And here it is the present value. What is your closing value? It is 1 lakh, 1 lakh 10,000. Then 1 lakh 15,000 minus 1 lakh 10,000, your value becomes 5,000. This is the monetary gain. Fine. So next it is how to pay additional. Additional what it is? If you compare that is 7 lakh 30,000, 70,000 plus 30,000 is 1 lakh. 80,000 plus 30,000 is 1 lakh 10,000. So 1 lakh 10,000 minus 1 lakh, you just add it, no issue. I hope if you want, you can here itself you can mention that is 70,000 plus 30,000. This is the opening equals 100, right? 100. The same way, 70 plus 30, 100, right? Same way, that is 80 plus 80 plus 30, it is 110. So the difference is between opening and closing is 10,000 is increased, right? This 10,000, what you have to consider this is, this 10,000, you have to convert it for present value. That is 10,000. In this case, you should be very careful. That is which one you should take. So the 10,000, we don't know when it has increased. We don't know that is it's from January or February, March. I don't know that is in September, October. In that cases, we are not able to take a, or we are not able to consider one index value, or it is not an opening or it is not closing. For that reason, we consider it as an average. So for that reason, you have to make 230 divided by 210. Earlier we made that is, uh, I hope that is okay, 10,000, right? You can make 10,000. Here you can make a discounting factor for calculation purpose. Plus 230 divided by 210. If you multiply this one, I hope you get an exact value. What is 10,952? If you add this one, your total become 15,952. This is what uh, the value of current liability. The same way, what you have to calculate for? You have to calculate for current assets. What is that current assets now? What is your current assets? Is your opening current asset is 15 plus 20, 70,000. 20,000. Same, that is your index factor which you are considering. This one. Okay. So if you multiply with that one, 70,000 into, should be very careful here, you should not make mistake. 80,500. Here, most of the time, the students make any mistakes here. 80,500. Fine. If you add this closing, 25,000 plus 60,000, that is 85,000, right? 20 plus 60, 85,000. 85,000. Actually, your value are written 85,000, but actually, your value should be 80,500. So that is negative, right? So negative. That is minus. It's 4,500 negative. Yes, fine. No issue. That is if it is a negative. Fine. We are going for a next one. What is the additional which is added? Additional it is additional. How much? 20, 50, 70. 20, 60 plus 20, 85. 70 minus 85, which are taking 15,000. 15,000, right? 15,000. What you're doing, we don't know that is when it is increased. So for that reason, which we are making 2 into 230 divided by 210, which are taking average. So the value becomes 16,428. 16,420. I hope I will take 29. So here should be very careful that is this is plus, but 4,500 is minus. So now the value becomes 11,929. So 11,929. If you deduct it from your total value, become 4,023. This is what your total monetary gain, monetary gain, monetary gain that you should adjust in your net profit. This net profit you should adjust in your books of books of. So I hope that is I'm not used in a exact format, and I hope that you may confused on it. I will explain again. That is, I will repeat the same topic again. You just look at here. What you have to do here, it is very simple. You have to calculate the net monetary value of an value of your company. Let's take an example. That is, so fine. It is there. That is, when calculating net monetary, you have to deduct your from current liability of current asset. That is, if you are holding more current liability, then you are getting a benefit in respect to if you have a good inflations, or if the inflation is increased. In the same way, that is, if you are holding more current assets, that is cash, debtors, trade receivables. So these are things which come under current assets. I hope you are aware of this. So that which is reduces your value. So while calculating this one, you should be very careful. I'll show you. One, it is you can calculate separately, no issue. So cash you can calculate separately, debtors you can calculate separately, creditors you can calculate separately, and loan it is calculated separately. But for reducing the time, So what we are spending on calculations, what we did, that is we are added similar things, that is what we did, we are considered as a current liability. What we did, that is your current liability opening balance is 70 30 1 lakh. So you have mentioned 1 lakh. This is opening. And closing, you have mentioned that is 80 30 1 lakh 10,000. Finished. First step is. Now what you have to do, you have to convert this 1 lakh into present value. How we are converting? This conversion is very simple. That is 1 lakh which you have to convert for present value. So in that cases, what you have to do, you have to consider it is opening value, right? So opening value which we are considered. So that is 230 divided by 200. So the value become 1.15. Just multiply with that 1,15,000. What is your closing value? 1,10,000. 1,10,000, right? So 1,15,000 minus 1,10,000 become 5,000. Fine. That is the one thing. So second one, it is what is the addition? Addition, it is plus 5,000. Sorry, 10,000. How you determining? Your closing value is 1,10,000. Your opening 10,000. Oh, sorry, 1 lakh. So difference is 10,000. Fine. What is the discount? What is the index value which you're considering? That is average 230, 210. It's become 1.095. So if you multiply, don't get confused here. It is what is this 1.09? If you multiply with the same thing, that is into 230 divided by 210, you get the same value. There's no differences. Just to get here. Don't get confused. Fine. So the total monetary value becomes 15,952. That is the value which we get here. Okay. Next, what we are calculate current liability. Now we have to calculate for current assets. What is that? Current assets. What is the current assets? That is the opening is 1 lakh. 1 lakh. What is the closing current asset? Current liability is one. Sorry, current assets. Sorry. Current assets is 70,000. Right. What is the current assets closing value is 85,000. Next, what we have to do? We have to convert 70 opening balance into present value. Plus 70,000 into what is the opening value? 230 divided by 200. 80,500. 80,500. Your closing value is 85,000 plus negative 4,500. You should not make it as a positive. It is negative actually. Your value should be 80,500, but it is 85,000. Fine. Next, it is addition is what is addition? 5,000 rupees. That is sorry, 70,000 minus 85,000. That is 15,000. Sorry, 15,000 is finished. So 15,000. Fine. We don't know what is the when we are increased our current assets, right? We don't know for that reason which we are getting taking averages. 230 divided by 210. Value becomes 16,000. So 16,000 minus 4,500. Sorry, 16,000 actually you have to make it plus 4,500. 11,928. So 11,928 minus it from 50,952. So become 4,023. I hope you get the same value. Fine. So in such a way which we are determining or which we are adjusting monetary gain or loss on current assets and current liability by using uh, inflations according that to current purchasing power method. So next class, that is tomorrow at 12 to 1, which I continue with the current cost accounting as well as okay current purchasing power accounting and current cost accounting. So there we can use number of different kinds of problems for better understand. So if you have any questions, I hope that you can contact with the email IDs or with another other options. So thank you. Let's meet in your next class.